Good evening, everyone. Good evening. Good evening.
Good evening, sir.
Good evening, sir.
Sir, very good evening, sir.
Yes, very good evening, sir.
Hello, sir. Good evening.
Good evening, Jasmine. Good evening.
Good evening, sir.
Good evening, Vishnuji. Good. So let's start. Again, repeating basic things because every day you can say in a gap of every 1 hour, not even in a day, I am receiving different queries from different students, those who have joined, those who have not joined. After every 1 hour, I am repeating the same thing. And in the class also, when I am starting, I am repeating the same thing so that at least the question will not arise again. For IFRS, since last 17 to 18 years, I am teaching 3 months for June exam, March, April, May, for December exam, September, October, November. This is the first time we are having classes for entire 6 months. There are students who requested, sir, why not to start now only? We can prepare in advance. I thought it's okay. So we started early. Now, these classes which we are running are not exactly, I will say, that exam question and all that. I am grooming. I am helping you all. Maybe you are professionally qualified. Maybe you are pure graduate. That discussion is at very base level. But believe me, if we will be focusing on the syllabus content and if the base is clear, then the syllabus content will be understood very fast. If we are focusing on passing the exams, then once the basic understanding is at next level, the chapter becomes very easy. So pure exam standard, what type of question will be coming, preparing like that, we will be doing from around 10th of March. We will be doing the way we are doing for last 17, 18 years. We will be studying from 10th of March, April, May, 3 months for the exam style study. I'm not saying that is also exam style, but that is more and more exam style. These study which we are doing are not exam style. These are for basic understanding purpose. Somebody has good knowledge of accounting, somebody may don't have, somebody has average knowledge. To making them all at the same level. Now, these classes are being attended by three types of students. One is pure IFRS student, one is CIMA management case study students, and the third is ACCA financial reporting students. If we talk about syllabus content of IFRS, CIMA management case study, the accounting part, and the ACCA FR, all syllabus are common. All are same. All are IFRS. So whether you are an IFRS student or CIMA MCS student or you are ACCA FR student, the content is same, the syllabus is same. I need to teach all of you the same thing. Just that the exam pattern, the question pattern is different. For IFRS exam, the question pattern is different. For ACCA FR exam, the question pattern is different. For CIMA MCS exam, the question pattern is different. We can focus on the question pattern, what type of question come and all that later. Presently, I'm not focusing on any question pattern. I'm just focusing on basic understanding of IFRS accounting part. If somebody has poor knowledge, make it a better, so that when we start the chapter wise basic study, you will be detailed study, you will be able to focus in much better way. Now, whether you are an IFRS student, whether you are a CIMA MCS student, whether you are an ACCA FR student, these knowledge, when you do the exam related study, will be very important. Because then in that case, you will be able to understand the concept, prepare for the exam, the questions very well. As far as CIMA management case study is concerned, these studies are more important than what I will be teaching from 10th of March. So for the CIMA, this is more important going on. For IFRS FR student, more detailed study required. I am not questioning. But abhi ek bar just focus na. So anybody joining anytime, this is first class, this is sixth class, this is fifth class, fourth class, and all these videos are freely uploaded on YouTube. 4 classes done, 4 videos are there on YouTube. This is the 5th class, I will upload on YouTube. So all these classes, you don't need even software also. You just go on my YouTube channel. All the IFRS special batch classes are uploaded on YouTube. They will be there on YouTube till March 10th, whatever classes I will be taking. So no tension at all. You don't need to go into software to see the recordings and all that. Believe me, I have 30 plus years of experience in teaching. All the category of student who are doing this, maybe you are CMA qualified, CA qualified, you are pure graduate, you are pure student, this, that, whatever. These classes are very important for your understanding purpose. I can so use different WhatsApp messages continuously. Sir, this batch is going very well. Sir, these are very important more than the study, because these are very practical oriented discussion we are doing. Sir, this time I am liking the way you are teaching and all that. So forget about your exam. Nobody has exam tomorrow. If the CIMA case study exam, it is around 28th of May. If it is FR exam, ACCA FR, it is around June first week. If it is IFRS exam, it is June around 10th. So why to take tension now? Why to take tension when the exam is not tomorrow? Why not we focus on understanding the concepts from basics, which you all are interested in? So talking this thing, मेरा exam कब है, क्या है, क्या नहीं है, आपको, you are called in this batch for the knowledge purpose. Forget about your exam. If the CIMA MCS exam, I will be taking separate classes from around end of March. I will discuss CIMA MCS specifically in that. If it is IFRS, I will be discussing separate what will be the topic exam and all that I will be discussing. Abhi aap, for the time being, please ignore all these things from your mind. Just that you are called in the batch, you are required to do, that means it is a part of your syllabus. IFRS is the thing which we are going to study for 6 months. Everybody should be focusing on understanding what is my question paper, what exam and all that. Forget all these things. For every class, the live class link will be shared with you. It is fixed for Friday, 7:30 to 9. You will receive a link maybe on Friday morning, maybe on Thursday evening. For every class, live class, separate link will be shared with you. You will be able to attend the live classes. And those who have joined recently, 1 or 2 class earlier, all the classes, just 1 hour each. Please complete the recordings. Please study that. Whatever your doubts, ask me. There is no tension, man. Focus on what is taught in the class. Believe me, it will help you to understand the concept very well. So for the time being, don't focus on exam and everything. We will discuss from 10th March about exam and everything. Now, as we discussed in the last class, that we will be discussing impairment of assets in today's class. Next class, we will discuss provisions and contingencies. And after that class, we will discuss taxation for coming 2 classes. If somebody want to do some research, some study in advance, that next class, I will be teaching provisions and contingencies. And after that class, I will be teaching taxation. Today, we are going for impairment of assets. Now, what is impairment of assets? Forget about accounting. What is impairment of assets? I'm not asking. I'm just saying so that you start thinking in your mind. What is an impairment of assets? There are 2 kinds of assets in any organization. Non-current, current. Non-current means computer, laptop, furniture, property, non-current. Why they are non-current? Because they are not changing daily. They are not being purchased daily. They are being purchased for 2, 3, 4, 5, 10 years at a time and used in the business for a long term. That is non-current assets. The current assets, receivables, inventory, cash, bank, they are changing their value every day. Every day some inventory purchase, some are sold. Every day goods are sold on credit, some money received. Every day they are changing their value. And the inventory, if purchased today, produced today, will be sold out in 1 month, 2 months. If goods are sold on credit, they will be received in 1 month, 2 months. So current assets change their value regularly. They are being used in the business on regular basis. Non-current, current assets. These are the 2 assets for any business. Whether you are in manufacturing, whether you are in trading, whether you are providing service, like me, any business you are, you have 2 kinds of assets, non-current, current. The non-current, current assets, what type of expenditure, what type of accounting we are doing in books. Suppose I am purchasing a computer. For calculating my profit, I am not deducting cost of computer from my sale revenue. You all have given me tuition fees. From the tuition fees, I am not deducting computer value. I am deducting for computer depreciation. Because the computer will be used for 4, 5, 10 years. And I will be charging depreciation as an expense from the tuition fees to calculate my income. You think about your organization where you are working. Whatever non-current assets the organization is using, for those non-current assets, they are deducting every year the depreciation. Depreciation is a systematic, I should say, allocation of the cost of the assets during the life of the assets. If I am purchasing a computer, I am estimating what will be the life of the computer. Suppose the life of the computer I am estimating 5 years. You are also in the training industry. You are estimating the life will be 3 years. Somebody else in the training industry estimating the life will be 6 years. Nobody can question because depreciation is an estimation. Just that this logic arises. I am thinking in the training industry 5 years. You are thinking 3 years. Somebody else is thinking 6 years. If we do like this, then there is no accounting possible. Without any logic, without any justification, you will just think that the life is different than what Prakash Saraf is thinking. We are in the same industry and you are thinking the life of the asset different than mine. Do you have any logic? If you don't have any logic, my estimation, your estimation in the same business cannot be different. It cannot be different. If it is different, you need to justify. Suppose somebody is using the computer for making some software, there is a huge usage of computer memory and all that in their business. But in my business, it's basic usage. The computer already I purchased in 2019 and it is 26, 7 years already. Before the corona, I purchased this computer. It's a heavy, big, you can say features computer. The cost at that time was around 1.6 lakh, including GST. We can purchase computer at 30, 40,000, the assembled one. This is all original parts. because I want to take classes from the best machine. So I purchased the computer I'm not making any story. This is all facts. 2019, I purchased this computer. I don't remember the exact date. And in 2026, when I'm sitting in front of you, the computer is running fantastic. I don't think so it will be getting over or creating any problem in 2-3 years. It is running very well. Koi problem nahi. So if I estimated the life of the computer, say 5 years, and somebody else is also in the training industry, why not the computer life, me and that person should be estimating same? Maybe you will say that I am using the computer in a day 10 to 12 hours. Whenever I get up in the morning, I start the computer machine, then I take the class, then maybe I am going to office, then again coming back, and many times, suppose Saturday, I will be opening the computer tomorrow morning at around 5:30, and continuously the classes will be there till 6 o'clock, 7 o'clock without breakup, and then after that uploading the class, giving you recording and all that. So the computer usage tomorrow will be around 17-18 hours if you actually count, because after the class also there is so many work, so many things to be done. Maybe somebody is using the computer only 2-3 hours. The machine get exhausted when it is used more. I'm not saying the depreciation is because of usage, because depreciation is normal wear and tear. Maybe you are not using the asset, then also the asset will be depreciated. But we need to estimate. The estimation in same kind of business, same industry, same type of assets are generally not different. Unless and until you have some justification. But if you have justification, you can have a different estimate for a depreciation than mine. If you have the justification, if you have the logic. So every organization, even me also, doing depreciation based on estimation. What is the cost of the asset? How many years I am going to use it? Estimation. What is going to be the salvage value? And on that basis, I charge a depreciation on non-current assets. Not only computer, every asset. Everybody is doing this. Not that Saraf Academy. Everybody is doing this. Once we are charging depreciation, along with that, after certain number of years, we may, there is no compulsion, we may do revaluation of an asset. Revaluation is not a compulsion. Revaluation is an option. Suppose this computer I am already using for last 6 years. I have already charged a depreciation for 6 years. The value of the computer after charging 6-year depreciation has some value. That value is called carrying value. The carrying value is some value. But the computer value in the market, if I will sell this computer, is not that carrying value. It is different. For this property, I purchased 15-20 years back, and I have already charged a depreciation on this property. The carrying value in the books, the market value is very different. Maybe for computer, the carrying value is more, the market value is less. Maybe for property, the carrying value is less, but the market value is more. The value in the market for any asset and whatever you are having in the books, the carrying value after depreciation are not same. You are not bound also to record the market value, to do the revaluation. There is no rule in the world. Neither in Indian accounting, neither in IFRS. But if you want, if you are interested, you can do the revaluation, you can do the market valuation, and you can record in the books. You can, no compulsion. If there is increase in value, you will increase the assets value like property. If there is decrease in value, you will decrease the assets value like computer, and you will record the assets value at market value in your books. The increase or decrease will be recorded as a gain or loss. I'm not going into that. Where that gain or loss will be recorded, that's a technical thing that we will discuss later. But you are doing depreciation, which is a compulsion, systematic allocation of the assets cost based on the life, based on the estimated salvage value, you will charge a depreciation. And after depreciation, maybe 2 year, 3 year, 4 year, 5, it's upon you. You can do revaluation. In revaluation, the value of assets may be up may be down, and you can record that revaluation. Revaluation is not a compulsion, but depreciation is a compulsion. Depreciation you need to record whatever estimation you do. It's a systematic estimation, logical estimation. It cannot be said as a rule in the law. If you are following company law in India, so as per company law, schedule, whatever, there is a rule for a different kind of assets, what depreciation you can charge. That is as per company law, not as per IFRS, not as per Ind AS. If you are a company, you are preparing books of accounts as per company law. Company law is saying for a different industry, different kind of assets, what depreciation rule are there, you will follow that. But in your books of accounts, not required to follow company law. You can. And maybe you are a partnership, maybe you are a proprietorship, maybe you are an individual. There is no company law applicable on you. And in India, the company law is different. In US, UK, everywhere it is different. Depreciation need to be done. But there is no rule set for the depreciation. It's based on estimation. Revaluation, anywhere in the world, it's an option. You can do revaluation, you can record, you may not record. It's upon you. My property value, market value is different than whatever in the books. I want to record, I can. I don't want to record, I can. There is no compulsion on me. Every organization in the world is doing depreciation and revaluation if they require. But doing this much is enough. If relating to assets, we are recording depreciation and we are doing revaluation, is this enough? Can we say that we are doing justice in preparing our books of accounts? The question comes here, still there is a missing gap, which the accounting body realized. Even though you are doing depreciation and even though you are doing revaluation, if you are interested, you may not be recording revaluation if you are not interested. Like I am in Saraf Academy, I am not doing any revaluation. The property I purchased 15, 20 years back, around 2 CR, the value of the property 7 to 8 CR, but I am not recording anything. So my assets value in the books, 2 CR minus the depreciation, is very low value. But the market value is 7 to 8 crore, 7 to 8, that is 3-4 times. But I am not doing any accounting because I am not in compulsion. I am not interested. Why I am not doing any accounting for this? Our subject matter is not this today. For that reason, I am not going into that detail. But I am not bound to do that and I am not doing that. In case of computer, if suppose I am charging depreciation for the last 5-6 years, on a computer, say 2 lakh is the value, and I have done depreciation in 6 years, say 1,80,000. So the value of the computer left after depreciation is 20,000. But if I will sell this computer, I will not get more than 5,000 because it is already, as per the buyer, the full life is exhausted. A technological TV, fridge and all that computer, the life is 5-6 years, man. It is running for me very well, but I will not be getting 20,000 in the market. For an asset, the value in the books and the market value is lower. The value in the books is higher and the market value is lower. For another asset, property, the value in the books is lower and the market value is higher. Two kinds of assets. Every organization, not only Saraf, every organization. If the value is higher, there is no tension. Why there is no tension? The higher value, when I will sell the property, I will realize, I will record. It is a future gain. And it is not going to arise also. If I will sell, where I will take the training classes, where I will teach, where I will stay, I am not going to sell this property, man. There is nothing in my brain for coming 2, 3, 5, 10 years, I am going to sell this property. No, man. Bold from the blue. So when that gain is not going to arise, why to record now? Something notional. Notional losses, notional gain not to be recorded, sir. They will be recorded when you will realize. If you want to record, you can do revaluation, but there is no compulsion. But if it is a computer and the value is 20,000 in the books, but when I will sell, I will get only 5,000. The question arises that, do we need to record this 15,000 loss? It's not a, you have not done revaluation. I am not doing. Revaluation I am not doing because that is not a compulsion. But forget about revaluation, or maybe I have done that, forget about that. Should I not record the assets in place of 25,000 only? Should I not record the loss of 15,000 in the business now, even though I am not selling the computer, even though I am using? You will raise questions, sir. This loss also you will incur when you will sell. You are not selling now. You should not record. But if we take this example to slightly higher level, suppose in my business, the tuition fees is coming less. The students are joining less. The cash flows are less. Or maybe suppose in my business, the competitors have joined the business huge. So the market is very subjective. The students are joining at the competitor classes also. For that reason, the cash flow are lower. Or the demand for IFRS, ACCA, CIMA, whatever I am teaching, in the market it is less. Whether it will improve the demand, I don't know. But we can see some problems in the business. And the problems in the business means the assets are not giving proper income. The assets are not giving proper cash flow. The assets are not giving proper return. It happened in past so many companies in the world. Just one or two examples. Suppose in case of Enron in 2001 and 2 times in USA, energy company. Or you talk about 2007-8 subprime crisis. Many banks, financial institutions, many persons who have borrowed small money, they were not able to pay. Why they were not able to pay in subprime crisis? Because they are finding the business is not running properly. The demand of the products has gone down. The market is under recession. Demand will improve or not, because the recession of 2007-8 continued till 2014-15. It was a big period. So that period, when the business is down, ultimately your assets are not giving proper return. You may be thinking that after 1 year, 2 years, the market will improve, demand will increase, and I will be able to generate. But that is just your imagination. In case of Enron, what happened in 2001-2? Earlier, they have suffered losses. The assets value down, business is suffering, they are not able to pay the liabilities. The problem is there, but still they are not writing off the assets. And on one day, single day, they are coming, हमारा तो इतना business में loss हो गया. After 2-3 years, they are saying the assets is not going to give this much value. We are not able to pay our liabilities. The company become insolvent. The assets in the balance sheet are giving 20-30% money, which we know already. We know already 2-3 years back that this is going to happen. But still we are not doing any accounting. The assets are there in the balance sheet of 10 crore, 100 crore. But when you sell, you will not realize 10 crore, 100 crores. You will realize less. And on one single day, you are recording all the losses. Is it logical that for last so many years, 2, 3, 4 years, we are saying to our creditors, bhai, we have this much assets, we will be able to pay. We are telling to banks, financial institutions who have given money, we will pay interest principal. And one single day after 3, 4 years, we are surrender. No money, we can't pay. Why not? We said earlier only. What is the purpose of preparing books of accounts then? It is better that we don't prepare books of accounts. If through the books of accounts, PL account, balance sheet, we are not able to give a proper picture to our investor, to our financiers, to our creditors, then what is the purpose of preparing books of accounts, man? Revaluation is optional. Depreciation is estimation. Systematic estimation. But impairment is not optional. Impairment is not estimation. Impairment is a compulsion. If at the end of the year you are finding that the assets value in the books does not command the value in the market, my computer value in the books 20,000 does not command 20,000 in the market, maybe I am not selling. I will sell, but I need to record loss now. It's not optional. It's a compulsion. Impairment. Suppose at the time of Corona, nobody knows that when Corona will be over. It started in 19, 20, 21 tak it was running. At a time we were thinking Corona number for whole life it will be the norm. Nobody knows, sir. We are not God. So at the time of Corona, hotels, nobody is there in the hotel. Occupancy rate 5 to 10%, even lower than that. 100, 200 rooms of the hotels all vacant. No cash flow. And there is no imagination that it will come. In 2020 Corona, who will be going in the hotel? Nobody. So at the time of 2020-21 Corona time, any business where the physical presence is required, one example, hotel, maybe the hotel property value, whatever man in the books. But looking at that situation, we realize that the hotel value in the books, ITC hotels, any hotel company, whether it's a global, whether it's a multinational hotel, or whether it's a domestic hotel company, no hotel or any company, the hotel's value has deteriorated because the business will revive, demand will be there, nobody knows. Your rooms are vacant. Your property just sitting like this. Nobody is there in the property to enjoy. No rental income. Your business is fully destroyed, man. So if you say that after 3-4 years, a hotel company become insolvent, not able to pay liability, because with the property they are not getting anything. Nothing, man. कुछ नहीं आ रहा है. हो सकता है they would have changed their business model and all. That's other thing. But at that moment, what we are thinking, the demand has gone. There is no demand. It is very less what was earlier. So we will not be able to generate that cash flow from the assets. That means the asset value has deteriorated. We are bound to record impairment loss at the time of Corona in 2020-21 in case of all the hotels. It's not optional. It's a compulsion. It's not a question of only accounting. It's a question of justified fair value, justified logical presentation of your assets liability to the users. Whether the users are investors, whether the users are financiers, whether the users are creditors, whether the users are anybody, man. Because the books of accounts, PL account, balance sheet, everything are for the users. And if the users cannot take informed decisions, then what is the purpose of preparing books of accounts? So accounting body in 2001-2 Enron case, in 2007-8 during subprime crisis case, even in the Corona case 2020, that time the impairment was already there. The accounting was already there, IAS 36. But accounting body made a rule that you charge a depreciation based on estimation. Very well. You may be doing revaluation very well. You may be doing. But impairment is not maybe. Impairment is a compulsion. You can't defer your losses which is arising in the current year to 2 years, 3 years later. You will be showing a very good picture now, and after 2 years, you are not able to pay your liabilities. That should not be done. You should be preparing proper accounting. You should be recording your losses on a conservative basis, on an estimation basis. Impairment is not an optional. It's a compulsion. Impairment is always loss. Impairment is always decrease in the value. Computer, not property. Impairment is not increase. For increase, it's a revaluation. For revaluation, I am not discussing now. I am talking about impairment means decrease in value. Whatever the value in the books for any asset, the asset does not command that value. The value in the books after depreciation is called carrying value. That carrying value in the books is greater than the market value or any fair value from the market. The asset has lost its value. Why the asset has lost its value? There are so many reasons. There may be physical damage to the asset, some accident, something. There is a decrease in the cash flow. There is competitor in the market. There is increase in the interest rate. Because when the increase in the interest rate, every asset value will go down. Why? If the interest rate goes up, whether you will borrow? No. I will borrow? No. So demand for money will be less. And when the people don't have money, why will demand any assets? If I don't have money, why I will buy any assets? I don't have money, man. If the interest rate goes up in the market, demand for money goes down. And when the money is not there, demand for assets goes down. And when the demand for assets goes down, prices will go down. There are many reasons why there is decrease in the assets value. I'm not talking one reason, but any reason whatsoever. And you know that because of that reason, There may be decrease in the assets value, whatever you are showing in the books. You need to check this. You need to find out this. You need to see that whether actually there is decrease in value. And if there is decrease in value, you are bound to record it. You can't defer it, man. You can't defer the loss of the current year 2 years, 3 years later. That 2, 3 years you will be showing a good picture, and after 3 years you will be telling everything gone. Not allowed, man. Impairment is a compulsion. It's not depreciation. It's not revaluation. Depreciation is a separate principle. Revaluation is a separate principle. It is other than that. Impairment. We are bound to record impairment if we find that the assets are impaired because of any reason. There are thousands of reasons. If you find that the asset has impaired, then you are bound to record that impairment loss in the books of accounts. It's not a question of accounting. It's a question of fair presentation. It's a question of giving information about your business, the true worth of the business, the true value of assets, the true earnings potential of the company to the users. Accounting is after the fact. The question of accounting is not coming. The question is, are you true? Are you reporting properly? Are you saying your income correctly? Are you showing your value of assets correctly so that the users can take informed decisions? For that reason, impairment is a compulsion and it need to be accounted for in the books of accounts. Now, if I'm telling about that my computer value has impaired, the value in the books is say 20,000 after depreciation and the value in the market is 5,000. The question comes here, is I am earning from the computer? I am getting the tuition fees from the computer, or I am getting the tuition fees from computer, camera, furniture, property, everything. A single asset is not giving me cash flow. A single asset is not giving me any income. It's a combination of assets which are giving me income or cash flow. Computer, camera, laptop, furniture, property, all are there. These are the combination of assets in Saraf Academy giving cash flow to Saraf Academy. Maybe the computer value in the market is lower. I am accepting. The value of the computer is 20. But in the market, if I will sell, I will get 5,000. No problem. Yes. But the question is that just because the computer value is lower in the market, I can say that I have suffered a loss. Because I am not going to sell my arm. I am not asking anybody, sir, what price you will pay. I am not looking for anybody to see that what price. Because my computer is running very well, man. With the computer, with the camera, with the furniture, with the property, I am generating cash flow. I am not generating cash flow income in Saraf Academy with computer. This is a case in most of the organization. In any organization, the single asset is not giving you cash flow. Combination of assets is giving you cash flow. Those combination of assets in accounting language called, in IFRS language called cash generating unit. CGU, cash generating unit. In Saraf Academy, cash generating unit is computer, camera, furniture, property, all. These are my cash generating unit. I cannot calculate loss on computer just because the price is gone down. I will say loss on computer at 20-5 because computer is not giving me cash flow. My cash flow is coming from all these 3-4 assets. So when I will calculate impairment loss, I will not be calculating on single asset. I will be calculating impairment loss on my entire unit. On my entire unit, how I will calculate the loss? As we discussed since beginning, the time value of money. $100 today, after 1 year, will not be 100. If I am giving you $100, you will be giving me after 1 year, say $105. If you are giving me 100, I will be giving you after 5 years 105. After 1 year, 105. 100 is called present value. 105 is called future value. 100 is present value without interest. 105 is future value with interest. The future value is including interest. The present value is excluding interest. From this entire unit, computer, camera, furniture, property, I'm going to generate cash flow, tuition fees. I'm going to generate tuition fees. And to generate tuition fees, there is expenditure of electricity, there is expenditure of some maintenance and all that. Those outflows are there. So tuition fees minus the outflow. What will be the net cash flow? I need to estimate. I need to estimate based on my past. For last 2-3 years, how much cash flow I am generating from the tuition fees minus the outflows minus the expenditure. I can say that I will be generating the same cash flow in coming years or maybe slightly higher. That's subjectivity involved. In a question in exam, the figures are given. In your practical life, you need to estimate, man. I can estimate what will be my tuition fees cash flow in coming, say, 4 or 5 years. With this entire cash generating unit, what are the cash flow I am going to generate? Those cash flows are future value. 1 year later, 2 year later, 3 year later, 4 year later, 5 year later. Those cash flows are including interest. Just now I said 100, 105. 100 is present value, 105 future value. The cash flows are future value. I need to find out present value of those cash flows. I need to deduct interest out of those cash flows. For deducting interest, the discounting factor will be given to you in the exam. 100 becomes 105. The discounting factor 100 divided by 105. You can say 1 divided by 1.05. 1 divided by 1.05, say coming 0.9965. Say, what is coming? Forget. Don't do calculator. 1 divided by 1.05 is coming 0.965. What do we mean by 0.965? $1 after 1 year. And if we deduct 5%, the value today is 0.965. $1 value today 0.965. So in my case, the cash flow after 1 year, tuition fees minus rent, electricity and all that, all deducted. The net cash flow after 1 year. The value today into 0.965. $1 value today is 0.965. So whatever my cash flow value today into 0.965. In the question in accounting exam, either they will give you 0.965 to find out present value, or they will give you present value calculation already. You don't need to do. They will give you the present value after 1 year. The value today automatically the value is given. But not only 1 year. Second year, third year, fourth year, fifth year. For second year, the discounting factor will be further lower. Because if $1 after 2 year, the 2 year 5% will be deducted. So the present value will be say 0.912. $1 after 2 year value today after deducting 5% for 2 years is 0.912. So what will be the value of my cash flow which I am going to generate after second year at second year end multiplied by 0.912. So maybe they will give you 4 or 5 years cash flow and they will give you discounting factor for each year. You will multiply, you will combine, you will get the total present value. Most of the cases, since it is not a finance exam, it's an accounting exam, they will give you the present value all calculated for you. You don't need to do the calculation. For Saraf Academy, all these assets, what cash flow they are going to give me, the present value of those cash flow, discounted cash flow, present value means discounted cash flow, deducting interest, it's say coming 20 CR, 20 crore. Say, I am hypothetically saying 20 CR. And if I will sell these assets, computer, camera, furniture, property, I will be getting 15 crore. Suppose I will sell these assets, I will get 15 crore. And if I will use these assets, then the cash flow, discounted cash flow, I will be getting 20 crore. In technical language, they use the term discounted cash flow is called value in use. If you will use it, then what is the value you will be generating? If I will use these assets in the business, what is the value I will be generating? Discounted cash flow 20 crore. And if I will sell these assets, I will not use it, I will sell these assets, I will be getting 15 crore. Selling means sale value minus expenditure on sale. Suppose I need to sell this property through a broker. I will be getting the sale value minus the brokerage. The value in use is if I will use what is the present value of cash flow, discounted cash flow. And if I will sell the sale value minus expenditure on sale, that is called the net realizable value. If I will sell, I will get 15 crore. And if I will use, I will get 20 crore. I am not a Kalidas. Out of the two, which is better for me, I will be doing. If by using the asset, I am going to get 20 crore. And if by selling the asset, I am going to get 15 crore. So if somebody will ask me, sir, what you will do? I will use them. I will not sell them. Because by using, I am going to get 20 crore. Higher of the two. Value in use 20 crore. Net sale price is 15 crore. Higher of the two is treated as value of these assets, which is not in the books. Higher of the two is called value of these assets, which is 20 crore. And if that 20 crore is less than the carrying value of these assets in the books, the carrying value of these assets in the books, matlab the cost minus depreciation already done, the carrying value of these assets in the books is greater than 20 crore. If it is greater than 20 crore, the difference is impairment loss. If my book value, carrying value after depreciation is X, and my higher of the two, value in use value, discounted cash flow, net sale price, sale value, higher of the two is lower than X. 20 crore is lower than X. The difference is called impairment loss. And I am bound to record this impairment loss in the books today. I cannot defer. When I will be doing this? When I found there is some reason for impairment. When my business is not running well, the demand for the courses are less, competitors has come, there is some damage, there is some badwill in the market, something or increase in there. These are just examples. I'm just saying example because there is no exhaustive list for that. You need to check at the end of the year when you are preparing your financial statements that for any cash generating unit, like I'm talking about, for any cash generating unit, is there reason that the asset may have been impaired? Is there anything which you can find out that there may be impairment? If there is a reason, you need to check. You need to test that what is your carrying value and what is the higher of the two. Higher of the two, value in use, discounted cash flow, net sale price. Higher of the two. If the higher of the two is less than the carrying value, the difference is impairment loss, and we are bound to record impairment loss in the books of accounts in that year only. Please understand that. Suppose in Saraf Academy, do I am doing this? I am not doing. Why? Because I don't find that the students are coming less. I don't find that the competitor are there, they are taking my market. I don't find that. Because I am realizing the students are increasing. The tuition fees is adequate. And in the market, the interest rate has not gone up so much that the assets value has did. It's not like that. So why I will do any impairment? It's not that bold from the blue I will start. There should be question. Corona, subprime, this, that. There should be some reason. If there is no reason, you just bolt from the blue in the night you start and you are doing impairment. That's not done, sir. You should have reason, justified reason that there may be impairment of assets. There may be. There are chances. There is reason. When there is reason, there are chances. You need to test that actually the asset has impaired. You need to compare your carrying value with the higher of the two. Higher of the two, value in use, discounted cash flow, and sale price. Higher of the two is called recoverable amount. In technical language, in accounting language, it is called the recoverable amount. And if the recoverable amount is less than the carrying value, the difference is impairment loss. What is recoverable amount? The recoverable amount is value in use, discounted cash flow, net sale price, higher of the two. Higher of the two will be called recoverable amount, and that recoverable amount less than the carrying value, the difference is impairment loss. You can't defer it. You are bound to record. It is not revaluation. It's a loss which you have suffered. Record it, man. Maybe after Corona, now if you talk about hotel, the occupancy rate is 70-80%, man. Because after Corona, people started going for roaming like anything. In the house, they are disturbed. Sab look, everybody is going for roaming and all that. We didn't know this. So we may have recorded impairment in 2020, 21. But in 22, 23, 24, the situation reversed. The occupancy again come back. And the occupancy and the revenue and all that are more than better than earlier year, man. Whatever impairment loss you have recorded, you can reverse. If you recorded in 2021 some impairment loss, say 5 CR, and in 22, 23, 24, you are finding that the reasons for impairment has reversed. It's all over, man. It's tension over. It's all things are going on track. So whatever loss you have recorded, you can record it as a reversal of impairment as an income. But the reversal is allowed only to the extent what you recorded as a loss. It cannot be. Suppose you will say that the impairment loss you recorded in 2021, say 5 CR. And now in 23, 24, the value increase is greater than 5 CR. The reversal is such a drastic that it has increased in the value greater than not allowed. Whatever you recorded, you can record that much. You will say, why not allowed? I said in the beginning only, if the property value has gone up, I cannot record the income. Why? Because I'm not going to sell it, man. Whether the hotel are going to sell the property so that they cannot. Accounts, since when I am studying 30, 35, 40 years, is always follow conservative approach. Conservative approach means if the incomes are there, you need to be more sure relating to the income to record it. But if the expenses are there, even though there is a slight chance of expenses losses, you are bound to record. That is the principle we follow in preparing books of accounts. That is called conservative principle. So if it is a loss, I am bound to record. If it is again, I cannot. I recorded impairment loss earlier, I can reverse that if the situation has reversed. But not more than what impairment loss I recorded earlier. I cannot record more than that what I recorded earlier. But this can be possible, like it happened in Corona or like it can happen in any organization. When you will do impairment, when there are reason to believe that, reason to support that the asset may have impaired, the cash generating unit has impaired. For that, you need to test. You need to check the carrying value of the unit with the recoverable amount. Recoverable amount is value in use, discounted cash flow, and net sale price, whichever is higher. That recoverable amount is less than the carrying value, the difference is impairment loss. You are bound to record that impairment loss. If the recoverable amount is greater than the carrying value, no gain, because impairment is not gain. Impairment is only a loss. You recorded impairment loss in 1 year, and after 1 or 2, 3, 4 years, the reversal arises. Whatever impairment loss you recorded earlier, you can record it as an income. You can record income only to the extent what you recorded earlier as a loss, not more than that. But this is not a question of accounting. This is showing a correct picture, a true worth of the business, true assets value, true profit to the investors, to the shareholders, to the financiers, so that they can take informed decisions. They will not come to know something bold from the blue. That itna din to bataye nahi, this is not said, and now on one day it is happening. This should not be done. Because earlier this was there, 10, 15, 20, whenever the impairment was not there, this was happening, but this is stopped. You can't do that. Maybe in your industry, other business are not affected. Your business is affected because of some internal issues, some strike, lockouts, this, that, whatever. Your business is impaired. The others are not impaired. If your business is impaired, you know that it is impaired. You are bound to record that. Internal problems are there. You know that impaired, and still you are not accounting. And later on, after 2, 3 years, bold from the blue, you say all are lost. That's not done. Then what is the purpose of preparing books of accounts? We are bound to record impairment losses. If we have reason to believe that internal, external, the assets may have impaired, we need to test the impairment. We need to calculate the impairment and record that impairment in the books of accounts. We can't defer it. Impairment is not a gain, it's a loss. The impairment loss maybe in subsequent year can reverse. The situation reversed. You recorded impairment loss earlier, you can reverse, you can record gain, but not more than that. This is other than depreciation, other than revaluation. Depreciation, revaluation is a separate rule, separate system, separate thing. Impairment is a compulsion. It's not an option. You are bound to record impairment loss. You need to show your true value to your users of the financial statement properly. And you are bound to record that. Just that when I am talking my example, in example, it's just an explanation. Corona example, subprime crisis, Enron, all are examples. You can do so many research, you will find that if an organization in say 10, 15 years never find any problem, maybe internal, maybe external, maybe recession, maybe this, never find any problem, I don't think so. Genuinely, you can say maybe out of 100, one organization may be possible that didn't find any problem in 10, 15, 20 years. But most of business is a cycle. It will be down, it will be up, it will be down. So when it is down, because of any reason, internal, you are bound to record impairment. If you are not finding any impairment loss in an organization, financials for 10, kuch to ghapla hai. For 10, 15 years, nothing, no impairment. Impossible, sir. They are not preparing proper accounts. Now, you cannot rely on that organization accounting data to take decisions because the organization is doing window dressing. They are not doing the things which they should be doing. If they are doing the things, definitely in 10, 15 years, impairment will be coming, sir. Maybe it will be reversed. Maybe the situation is bad, recorded impairment loss, after 2, 3 years it reversed. Chalega. But impairment loss will be there, man. It is not possible that in your life everything will be good only for whole life. Never happen. It's business. So if impairment is not recorded on a regular basis, on a gap, you will find that some issues are there. Because impairment is not a fixed calculation. You will say that the discounted cash flow is very high or this, you can. There is the justification need to be given to the auditors because they are the person who are auditing the books of accounts. But normally if we understand as a common man, the life cannot be same standard every time, year after year. It will have some problems here and there in some years. So forget about Saraf Academy because me and my wife is the shareholder. There is no as such debt. So we are not recording impairment. It's okay. Forget about that. But a listed company where the public has invested in the shares and all that, those companies need to follow this in much, much detailed manner. Even Saraf Academy also need to follow. But since in my case, me and my wife is the shareholder, there is no as such debt and all that. And if the liabilities are there, some here and there, very small amounts, man. Even though if I am not recording impairment, me and my wife already know what is happening in the business. But in a listed company, Reliance, ITC, any company, you are not running the business. You are just a shareholder. You have just given debt to the company, something. In those companies, impairment recording is very essential. Even in Saraf Academy also, it's not an option. But I'm just saying that in listed companies, big companies, maybe not listed, big turnover and all that, it's more important in those types of companies where many stakeholders are there. And the stakeholders, if not given information about the correct picture, they cannot take decision. Accounts is prepared for taking decisions. For investors, for financiers, for board members, directors, CEO, CFO, they are prepared for taking decisions. And if they are not giving true picture, how the decisions can be correct? How the decisions will be coming in the right direction if the accounts are not prepared in a proper way? This is impairment. Not written anything here, whatever I said, this is basic understanding of impairment. You will think about journal, recording in the back, that's secondary. First of all, why? What is impairment? Why it happened? Why it is to be accounted for? How it is accounted for? When to? You need to understand the basic things. Whether you are a chartered accountant, whether you are a CMA qualified, whether you are a graduate, whether you are doing CIMA, whether you are doing anything, forget about your exam and everything. Abhi nahi hai. It's huge. Huge time is left. I am to teaching 3 months. This is already 4, 5 months left. So why to take tension about exam? Just try to understand the concepts very easily. Because in CIMA, whatever I discussed, if you know this is more important CIMA case study than the accounting part. In IFRS and FR, the accounting part is more important. Technicality. But in CIMA exam, the understanding is more important than the accounting part. So whatever I discuss, Jasmine and anybody who is accounting, mane CIMA student, MCS, whatever I discussed is more important than whatever I will discuss now. That is more important. What is impairment, why it is happening and all that. Because that type of question they will ask in the exam. Your conceptual understanding is there, you will pass CIMA MCS. Otherwise not. In IFRS, FR, along with the concepts, you need to be technical also. For technicality purpose, some further discussion we are doing. Just I have written an example, Zenith Electronic, or you can say Z company, making LED televisions and then selling. 3 years ago, the company acquired a small competitor. Why we acquired a competitor? So that competition will be finished and we will be able to control the market. 3 years ago, Zenith Electronics acquired a competitor. They paid premium. If you acquire any business, the value of the assets of the business 100 crore. You are paying 120, 130 crore. So you are paying for the goodwill of the business and they recognize the goodwill. Whatever they paid extra, they acquired the company and they recorded the goodwill. Now after 3 years, cheap imports from China is happening. Demand slow down. TVs are not selling so much. There is a price war because of both of these factors. The profit margin has gone down, price war, and the profit margin has fallen. Can we say that the assets has impaired? We don't know. But the situation is alarming that maybe the assets has impaired. The subsidiary money, the company which we acquired 3 years back, we paid goodwill premium and all that. But in 3 years, the situation has changed. There may be chances that this unit, the business which we acquired, their assets has impaired. The unit, the cash generating unit may have impaired. There is no 100% guarantee. We need to check. We need to see. These are giving situation that maybe they have impaired. The company has a cash generating unit, TV division, and the TV division, the problems are there, China, this, that. The assets carrying value, the plant and machinery of this TV division, the brand value, the goodwill value, the working capital, current assets, current liability total are 50 crore. After 3 years, when we are going to test whether there is impairment, the assets value are 50 crore, different assets given. For impairment, what we need to do? We need to compare this 50 crore with the recoverable amount. The recoverable amount is value in use, discounted cash flow, and net sale price, whichever is higher. Can plant generate cash independently? It is just asking that. Can we say that plant and machinery is giving cash to this unit? No. Plant, machinery, brand, goodwill, working capital, all are giving cash flow. We can't calculate impairment for plant. We need to calculate impairment for the entire unit. For that, we need to calculate for entire unit the recoverable amount. The example is giving that discounted cash flow, whatever the cash flow will be there from the unit, present value of those cash flows is 38 crore. And the fair value less cost to sell, net sale price, all the assets will be sold out minus the expenditure on sale will be 35. So this cash generating unit, if I will use, I will get 38. If I will sell, I will get 35. I will use only. Higher of the two is 38 crore. This recoverable amount is less than 50 crore. The carrying value of the asset is 50, but the recoverable amount is 38. So 50 minus 38, balance is impairment loss. 50 minus 38, balance is impairment loss. We need to record this impairment loss now. We can't defer. Because we find there is a reason, we tested, we checked, and we found that actually there is impairment loss. We need to record this impairment loss now. How to record? First of all, when for the unit there is a goodwill. Goodwill means super earning ability. In a business, suppose in my business, when I will say goodwill, whatever assets I have, on that assets, whatever return I should be generating, I will generate more than that. Here, the business is not giving me return. The business is giving me return less than what I should generate. So there is no goodwill, man. The goodwill is gone. Maybe 3 years back, when I acquired this business, I paid for the goodwill. But in 3 years, this goodwill gone. So whenever there is an impairment, the accounting body said that, first of all, finish goodwill. Out of 12 crore, impairment loss, 10 crore goodwill gone. If you say that the impairment loss is 4 crore, 10 crore, 4 crore goodwill gone. First of all, loss will be adjusted from the goodwill figure, goodwill gone. But here the loss is greater than the goodwill. If you adjust the 12 crore loss, 10 crore from goodwill, then also there is 2 crore extra loss. So first we adjust 10 crore from goodwill, the balance 2 crore we need to still adjust from other assets. What are the other assets? The other assets are brand, the other assets are plant and machinery, the other assets are working capital. What is working capital? Current assets, inventory, receivable, cash, bank. Suppose in Saraf Academy, cash balance each 5,000, bank balance each 5 lakh. What is the loss in this? No loss. Suppose receivable, we always record receivable what we are going to realize. Suppose inventory, we always record inventory at cost or sale price, whichever is lower. So in working capital, the items are already recorded at the lowest value. If your impairment loss is there is no impairment loss in the working capital items. They are already the lowest value. The impairment loss will be there on other items. Goodwill is already gone. The other items left in the unit, plant and brand, nothing else. There are 4 assets: plant, brand, goodwill, working capital. Goodwill gone. Working capital, there is no impairment, never, unless and until question says that the working capital 2 crore, 1 crore figure is extra, that's okay. Otherwise, practical life, problem silent, no working capital losses. So the loss 2 crore will be adjusted from the other assets, plant and brand. From where? 2 crore need to be adjusted from 30 and 5, from both, in the ratio of 30:5, pro rata basis. In the ratio of 30:5, 2 crore additional loss will be allocated. So from 30 and 5, 30:5 ratio, the 2 crore is adjusted 1.71 and 0.29. If there are other assets, they will be subject to impairment. So total impairment loss each 12 crore, goodwill gone, plant gone, and brand gone. Plant and brand based on the pro rata basis, whatever the value of assets are there. Whenever the impairment happen, the goodwill will be gone. And then the balance losses are there, they will be adjusted from the other assets. Maybe presently the demand is low, this, that, competitor. Maybe after 1 or 2 years, everything reverse. Demand gone up, competitor lost, because competitor, if they cannot survive, they will lose the business. Ultimately, you will be able to grow. Maybe after 1, 2, 3, 4 years, reversed. The goodwill loss you cannot reverse. Goodwill gone is gone. But the 2 crore reverse, money loss which you have recorded for plant and brand, you can reverse. But the situation should be there for reversal, otherwise not. After the impairment loss, this is your assets value. The plant value after impairment, the brand value after impairment, the goodwill value fully gone, the working capital. The total value is 38 because 12 we have recorded impairment loss. So always the value will be the recoverable amount only. The impairment loss will be when the recoverable amount is lower than the carrying value. That impairment loss will be adjusted from goodwill. If the extra loss is there, then they will be adjusted other than goodwill from the other assets. I have just written why this is required for banks to give credit, to take action against the client, for investors to invest in the shares of the company, for analysts to value the company, for CFO, CEO, for analyzing what profit, bonus and all that they will be giving, they will be taking. For that reason, it is required. If impairment is not required, it's an accounting, not a question of accounting. It's a business problem, man. Business आपका खराब चल रहा है. Business is not giving me outcome. So business assets value has gone down. I need to record them. Maybe I want to defer them. I cannot. I need to record at that time only. Impairment cannot be deferred. Some basic write-up which is very important in any business is written. You can go through once with this write-up. Then comes the comparison with US GAAP. IFRS Indian accounting says that But US GAAP says something else. What's something else? Just one single line difference. IFRS, US GAAP is saying that when you calculate impairment, you don't find out present value of cash flow. You don't find out. Undiscounted cash flow. Undiscounted cash flow. You don't compare the net sale price. Just you compare the assets carrying value with the undiscounted cash flow. In IFRS, we are saying discounted cash flow, net sale price, whichever is higher. But in US GAAP, undiscounted cash flow. You will say why? I can say that IFRS is more stringent because discounted cash flow will have a lower value. The lower value in this example was 38. So 50 to 38, there is a loss. But the undiscounted cash flow may be greater than 50 because it is not present value. It is the cash flow first year, second year, third year, fourth year. You add up all, don't find out present value. Maybe it is greater than 50. No impairment loss in US GAAP. There is no impairment loss in US GAAP because the cash flow you are going to get more than the carrying value. You will fight, sir, US GAPs would also be taking discounted. They are not taking, sir. They are saying that we will compare the carrying value with the undiscounted cash flow. So in the same example, suppose the carrying value, slightly different figure at 20. The undiscounted cash flow, undiscounted, not present value, is 18, which is less than 20. There is an impairment. But the impairment loss is not 20 minus 18. Impairment loss is comparing with the discounted cash flow value only and the fair value. You will test if the undiscounted cash flow is lower than the carrying value, there is an impairment. What is the impairment loss? That you need to calculate separately. But if undiscounted cash flow is greater than 20, there is no impairment loss. You don't need to calculate only, man. If the undiscounted cash flow is lower and it is 20 say lower, then you calculate impairment loss as discounted cash flow 15, but the sale value is 16. The 16 is the higher value. The loss is 20 minus 16. The loss will be 20 minus 16. In US GAAP also, in IFRS also. It's not different. But in US GAAP, you understand. Suppose the undiscounted cash flow is 22. Now there is no impairment loss in US GAAP. Maybe in IFRS, we are comparing the present value 15 and 16 higher, which is lower. But in US GAAP, since this is undiscounted greater than 20, impairment loss not to be calculated. But in IFRS, impairment loss will still be there. It is still in IFRS 20 minus 16, 4. But in US GAAP, since undiscounted is greater than 20, no impairment loss recognized. IFRS is more conservative as compared to US GAAP. US GAAP is saying that first of all, you test undiscounted is greater than or less than the carrying value. If it is greater, impairment loss not to be calculated only. If it is less, then only impairment loss will be calculated. So ultimately, we want to say that if we do the comparison between US GAAP and IFRS, first of all, there should be reason to believe that the asset has impaired. Internal, external, something happened. Both of them are asking. First, in IFRS, you need to calculate discounted, but in US GAAP, undiscounted. If the recoverable amount is less than carrying value, impairment. Here the US GAAP, it is when undiscounted is less, then it will be compared with the fair value difference impairment. Reversal in IFRS allowed, US GAAP not allowed. In Corona, US hotel company has recorded losses. In 22, 23, 24 reversal, US GAAP is not allowing that. You can't reverse. US GAAP is saying that you can't dance. 1 year you will record loss, next year you will reverse, not allowed. It's gone, it's gone. More conservative IFRS, but US GAAP is less conservative. US GAAP is rule-based accounting, understand. Whatever is there is you need to follow. IFRS is a principle-based accounting. Whatever is written in IFRS you don't want to follow. If you have reason, justification, you can do away with. Because US GAAP is rule-based, but IFRS is principle-based. So IFRS reflects economic value very sooner. Whenever the discounted cash flow lower, you need to record. But in US GAAP, undiscounted greater, you are not finding out economic value. You are not recording loss. You are carrying at a carrying value only. US GAAP waits for the stronger evidence. When the undiscounted is lower than the carrying value, then only you will record loss. But in IFRS, the discounted is, which is 90% time discounted, will be lower because it is deducting the time value of money, the interest component. So in IFRS, the impairment loss will be recorded faster as compared to US GAAP. In US GAAP, there are many further detail also. I am not going into that detail accounting because in IFRS also relating to impairment loss, there are more detailing. I am not discussing here the exam style or exam standard teaching. General discussion. What is impairment? What is depreciation? How to record revenue? What is basic lease accounting? What is when you purchase an asset on credit, how to account for? That is my purpose in these classes. I am not teaching the IFRS, detailed IFRS. But if these things students study properly, they develop their basic understanding. Somebody will not say that, sir, he is a chartered accountant, he is able to understand. I am making you equal. And even those who are CMA, CA qualified, and they have not gone into detail for last 5, 7, 10 years, whatever the changes, they also, their knowledge has deteriorated. Even they also require this groom up, this basic understanding of accounting. Not a question of exam, pass, fail, that's later. But everybody need to know basic understanding of different types of transactions or events in the accounts, how they are accounted for, why they are accounted for, what is the logic behind that. That is my purpose in these classes. No purpose of knowing what type of question will come in the exam, how to answer. वो बात की बात है. That we will discuss later. Whether it's a Vasist, whether it's a Jasmine, whether it's anybody, please understand the purpose of these classes, not exam focused, general. You can say for CIMA it is more exam focused, but for IFRS and FR exam it is not that much. We require further discussion, detailed discussion about different aspects. For CIMA, if you are doing these Friday classes properly till 10th March, you are very well prepared for CIMA exam type question to handle in the exam. Very well prepared. So these are very important for CIMA student as compared to IFRS. Now IFRS student, मेरे लिए नहीं, no sir. If I will be teaching you more technical and if you don't have the basic understanding, how you understand technical, you will find problem in any adjustment, any accounting treatment, plus, minus, any jerk, you will find problem because basics are not clear. That basics should be developed so that you will not find a problem in technical discussion, which I will be doing after 10th March. For today, this is over. Impairment accounting. What is impairment? How to record? When to record? What is the basic difference between IFRS and US GAAP? That was my purpose. If anybody has anything to ask, Satyabrata, Harish, Asar, Arnab, Jasmine, Vasist, anybody. Sudipta, Vishnu.
Sir, I have one question, sir. In that case, if the recoverable value of the plant is more than the 30, then can we apportion this 2 crore on that particular plant or not?
There are, with this much I have detail I have not explained, but
Okay.
I mean to say that first question, how you find out a recoverable value of only plant? Because the plant is not giving you cash flow. The entire unit
Okay.
is giving you cash flow. So how you will find out the recoverable value of only plant? You can't.
It may be the whenever trying to
Because
sell,
plant,
if we
in my case, the recoverable value of computer I can't calculate, sir. Because
okay.
with the computer I am not getting cash flow. I am getting cash flow from the entire unit. We say that there may be net sale price of each individual asset. We say
Okay.
for plant, for computer, I can sell for 5,000. I am just said example. वैसे ही plant you can sell first to somebody. You can see that that is a sale price of plant, not the recoverable amount, because you don't know the value in use for plant. There is no cash flow from plant. It is there in the IFRS and Indian accounting that suppose the plant sale value is 31. The plant individual sale value is 31. If that is the case, that is not recoverable, the sale value is 31. Then I cannot deduct impairment from plant. Then I will deduct the entire impairment from brand. You will say that sir, brand value is also greater than 4.71. Then we are arising a question which does not have any base. When the total assets, all assets combined, the sale value is 35, which is less than 50. How can it be possible that for this the sale value is greater and still the total sale value is 15 lower? So that question doesn't arise, sir. It may be possible that for an individual asset, the sale price is greater than 28.29. Then you can't deduct impairment loss from here. You need to deduct from here only, sir. But you can't say that that is the recoverable amount of plant. You say that is the sale price of plant. So that is written in IFRS Indian accounting. When you are deducting the impairment loss from different assets in the units, the individual assets value cannot be lower than their sale value. Whatever the sale price you can realize, you cannot deduct impairment loss more than that. So if because of the ratio 30:5 and you are deducting impairment loss from here and its sale price is 29, you cannot make it 28.29. You make it 29, balance impairment you deduct from here only, sir.
Okay, sir.
That I didn't said because I was not going into that technicality that much.
Okay, sir.
Okay? You are correct. But the language cannot be said as recoverable amount. The language would be individual asset sale price.
Sale price. Yes.
The sale price is the minimum value for any asset you can show in the books. You can't below that. So if the sale price is 29, you will record 29. So that means 0.71 impairment further you will deduct from here. You will make this 4 and you will keep this 29.
Okay, sir.
Okay? But the language cannot be recoverable amount. The language is the sale price.
Sale price.
Good, sir. Question is good. Because which I have not explained, you were asking that it's okay, but something came in your mind, sir.
Okay, sir.
Yes. So try to do all the recordings of different classes freely available on YouTube. I am uploading all these videos on YouTube for everybody, sir, for whole world. Anybody can see these videos. No software required for all these videos. Okay. So meeting on next Friday with provisions and contingencies. Basic understanding of provisions and contingencies. That we will discuss on next Friday. Okay.
Thank you, sir.
Thank you, bhai.
Thank you, sir.
Thank you, sir.
Thank you.